everyone. We're so glad you're joining us today on Prime Wealth.
Absolutely. It's great to be here with you all.
So today we're diving into a topic that's been buzzing around a lot lately, building a crypto portfolio safely.
Yeah, and it's really important to approach this with care, especially if you're over 40.
Right? The volatility can be a bit intimidating, but there are definitely ways to navigate it wisely.
Exactly. We'll talk about how to assess your risk tolerance, pick the right cryptocurrencies, and diversify your investments.
And we're also going to cover some practical tips on how to stay secure while investing in this digital space.
Plus, we'll share some common pitfalls to avoid as you start building that portfolio.
Sounds like a plan. So whether you're just curious about crypto or looking to dip your toes in, we've got you covered.
Let's jump right in then.
You know, Alex, it really feels like the financial landscape has shifted quite a bit these days. For those of us over 40, navigating things like crypto can seem pretty daunting, especially when you consider retirement timelines and the uncertainties that come with them.
Absolutely, Jordan. It's a critical time for many people. You might be nearing retirement, and the thought of inflation eating away at your savings can be really concerning. It's not just about having enough money to retire. It's about making sure that your money is working hard for you and keeping its value over time.
Right, and I think a lot of people feel this pressure. I've heard stories from friends who have been investing for years, and they're worried that traditional methods just aren't keeping up anymore. They see the volatility in the market and wonder if crypto could be a solution, but they're also scared of the risks involved.
That fear is totally valid. Crypto is often seen as a wild card in the investment world, but it's important to remember that, like any asset class, it has its place in a diversified portfolio. For someone over 40, the stakes can feel higher, especially if you're looking at a shorter time frame to grow your wealth.
Exactly. And with the rapid changes in technology and finance, it can feel overwhelming. You know, I read a statistic recently that said nearly half of Americans over 40 feel unprepared for retirement. That's a huge number. It highlights the importance of being proactive rather than reactive, wouldn't you say?
Definitely. And in times like these, when inflation is a real concern, it's crucial to explore all avenues. Crypto, for some, can act as a hedge against inflation, similar to gold or real estate. But it's not just about jumping on the latest trend. It's about understanding how it fits into your overall financial strategy.
So true. I think it's also about mindset. Many people over 40 have a more conservative approach to investing, having worked hard to build their savings. They often feel a strong emotional connection to their finances, which can make them hesitant to explore new avenues like crypto.
That emotional side is huge. You know, I've worked with clients who are just terrified of losing what they've built up over the years. It's understandable, but it's also important to recognize that staying stagnant can be risky too. If inflation continues to rise, the purchasing power of their savings could dwindle, which is why they might want to consider a more dynamic approach.
Yes, I had a friend who was very reluctant to invest in anything outside of traditional stocks and bonds. But when she finally did some research and invested a small portion of her portfolio in crypto, she found it was a game changer for her mindset. She felt empowered, like she was taking control of her financial future.
That's a great example. It's about finding a balance. You don't have to go all in on crypto. Rather, you can start small, which can help reduce the anxiety around it. It allows you to feel the market, learn how it moves, and understand its dynamics without jeopardizing your entire retirement plan.
And let's not forget about the importance of education in this space. I've seen too many people jump in without really understanding what they're investing in, which can lead to significant losses. Taking the time to learn about the technology, the different types of cryptocurrencies, and the market trends can make a massive difference.
Exactly. Knowledge is power, especially in a rapidly evolving field like crypto. For someone over 40, understanding the technology behind blockchain, for instance, can help demystify the whole crypto experience. It's not just about buying Bitcoin. It's about grasping why it exists and how it operates.
And speaking of understanding, I think it's also essential to consider the emotional aspect of investing in crypto. People might experience anxiety when they see their investments fluctuate wildly. It's important to have a strategy in place to manage those emotions, like setting clear investment goals and limits.
Yes, and having a clear exit strategy can alleviate some of that anxiety. If you know when you plan to take profits or cut losses, It can help you avoid making impulsive decisions based on fear or excitement.
That's such a good point. And for those listeners who might be thinking about crypto but aren't sure where to start, it's crucial to take stock of your current financial situation, right?
Exactly. Assessing your current portfolio, your risk tolerance, and your investment timeline is key. For someone in their 40s or 50s, focusing on a well-rounded approach that includes both conservative and more aggressive investments can provide a solid foundation.
And let's not overlook the fact that diversifying your investments can help mitigate some of the risks associated with volatility. A little bit of crypto can be part of a broader strategy that includes stocks, bonds, and maybe even real estate.
Precisely. A well-diversified portfolio can provide that cushion against market fluctuations, allowing you to sleep a little easier at night. It's all about finding what works best for your unique situation.
So, as we're talking about these strategies and the importance of being proactive, it really feels like the right time for many people to take a closer look at their financial plans.
Definitely. Considering not only traditional investments, but also how emerging assets like crypto can fit into the mix is vital. It can lead to greater financial security and, ultimately, more freedom in retirement.
And with that in mind, let's dive into some specific strategies for building a crypto portfolio safely. So let's dive into some practical strategies for building a crypto portfolio safely. Where do we start, Alex?
Well, the first thing I always recommend is to educate yourself. You really want to understand what you're investing in. I mean, crypto can be a bit like the Wild West, right? There's a lot of information out there, but not all of it is reliable.
Absolutely, and it can feel overwhelming. What's a good way to approach this learning phase?
Start with the basics. Look into major cryptocurrencies like Bitcoin and Ethereum, and then branch out to others. There are plenty of resources online, including articles, podcasts, and even YouTube channels dedicated to crypto education. Just be sure they're credible sources.
That makes sense. Once you've got a grasp on the basics, what's next?
Next, you'll want to set your investment goals. Are you in it for the long haul, or are you looking for short-term gains? Understanding your own objectives will guide your strategy. For instance, if you're looking long-term, you might focus on holding a diversified mix of coins.
Diversification is huge in traditional investing too. How would that look in crypto specifically?
Right, so let's say you decide to invest in a few major coins, maybe Bitcoin, Ethereum, and then a couple of altcoins that you believe have strong potential. A simple rule of thumb is to allocate a larger portion, like 60%, to the more established coins, and then distribute the remaining 40% among the riskier ones.
That sounds like a smart way to balance risk. What about the percentage split itself? How do you decide that?
It really depends on your risk tolerance. If you're more risk-averse, you might lean heavier on Bitcoin and Ethereum. If you're willing to take on more risk for the chance of higher rewards, you could increase your allocation to altcoins. Just keep in mind that with higher potential returns, usually comes greater volatility.
So it's like walking a tightrope. You want to push for growth, but not at the expense of your peace of mind.
Exactly. Another important step is to set a budget. Decide how much you're comfortable investing in crypto. A common guideline is to invest no more than 5 to 10% of your overall portfolio in cryptocurrencies. This way, you're not overexposed.
Got it. And once you've set your budget, what's the next step?
After you have your budget and your goals, you'll want to choose a reliable exchange to buy your cryptocurrencies. Look for exchanges with strong security measures and a good reputation. Some popular ones include Coinbase, Binance, and Kraken.
I've heard about those. What should someone look for in terms of security features?
Look for two-factor authentication, insurance policies for your assets, and a user-friendly interface. It's also a good idea to use hardware wallets for storing your crypto, especially for larger amounts. This adds an extra layer of security since it keeps your assets offline.
That definitely sounds smart. So once I purchase my crypto, how do I manage it?
Regular monitoring is key. Keep an eye on your investments, but try to avoid checking every day. Crypto can be highly volatile, and frequent checking can lead to impulsive decisions. Set a schedule, maybe once a week or month, to review your portfolio.
That's a great tip. It's easy to get swept up in the daily fluctuations. Should I also think about rebalancing my portfolio?
Yes, rebalancing is important. If one asset has grown significantly, it might throw off your original allocation. Rebalancing involves selling some of the overperforming assets and buying more of the undervalued ones to maintain your desired allocation.
Sounds like a disciplined approach. How often do you suggest rebalancing?
Many investors do it quarterly or semi-annually, but it really depends on your situation and how active you want to be. Just make sure to stay aligned with your investment goals.
Speaking of discipline, what about the emotional side of investing in crypto? It's known for its wild swings.
That's a big one. Emotions can definitely cloud judgment. One strategy is to set clear entry and exit points before you invest. Knowing when you'll sell, whether it's to take profits or cut losses, can help you stick to your plan and avoid panic selling.
So almost like having a roadmap for your investments?
Exactly. And remember to stay informed but not overwhelmed. It's important to keep up with market trends, technology developments, and regulatory changes, but don't let it consume your daily life. Balance is key.
Right, and I suppose having a community or support system can help too, like forums or groups of like-minded investors.
Definitely. Engaging with others can provide insights and emotional support. Just be cautious about taking advice blindly. Always do your own research before making decisions.
That's such a good reminder. With so many voices out there, it's easy to get swayed. Is there anything else to consider when building a crypto portfolio?
One last thing is to be prepared for the long haul. Crypto is still relatively young, and its future is uncertain. Having a long-term perspective can help you ride out the volatility and not make rash decisions during downturns.
That makes a lot of sense. It's like planting a tree. You don't expect it to bear fruit overnight.
Exactly. And now, let's transition to some common pitfalls that many investors fall into when venturing into crypto.
You know, Alex, while there are opportunities in crypto, it's important to address some common pitfalls that people fall into.
Absolutely, Jordan. One of the biggest mistakes I see is letting emotions dictate investment decisions. You get excited when prices surge and panic when they drop.
Right. That FOMO, fear of missing out, can really lead people to make hasty choices.
Exactly. I once worked with a client who jumped into a hot new coin because everyone was raving about it on social media. They didn't do any research. And a few weeks later, the value crashed.
Ouch. That's such a harsh lesson. So how can someone recognize that they're getting swept up in the hype?
Well, if you're making decisions based on what you see on social media, or if you find yourself constantly checking prices, that's a red flag. It's crucial to step back and evaluate your strategy.
And that brings us to another pitfall: lack of research.
Right. Not doing your homework can lead to investing in projects without understanding their fundamentals.
Can you give us an example of that?
Sure. There was this popular crypto project that made headlines, promising revolutionary technology and huge returns. A lot of people jumped in without digging deeper. Turns out, the team behind it had no real experience, and the tech wasn't as solid as they claimed.
So basically, they were marketing fluff?
Exactly. And when the hype died down, so did the value. It's a painful reminder that flashy marketing doesn't equal a sound investment.
So what can listeners do to avoid that trap?
First, always look for transparency. Check who's behind the project, what problem it's solving, and if they have a credible roadmap.
That's solid advice. And speaking of transparency, another mistake I see often is not having a clear exit strategy.
Yes! People can get so caught up in the potential gains that they forget to plan for losses. Have an exit strategy in mind. Know when to take profits or cut your losses.
I've heard stories of people holding on to their investments, hoping they'll bounce back, only to see their initial investment dwindle away.
Exactly. It's tough, but having a plan helps you stay rational. You can set specific price points for selling. That way, you're not just reacting to market swings.
That makes a lot of sense. And then there's the issue of over-diversification.
Yes, it's tempting to spread your investments across many different coins to mitigate risk, but too much diversification can dilute your potential gains.
So, how do you find the right balance?
Instead of trying to invest in every new coin that pops up, focus on a few you believe in after doing thorough research. Aim for quality over quantity.
That's great advice. And what about security risks?
Ah, yes. Security is a major concern. Many people underestimate the importance of safeguarding their wallets. For instance, using only exchanges for storage can be risky.
I've read stories of exchanges getting hacked.
Exactly. That's why it's crucial to use hardware wallets for long-term storage. They're much more secure than keeping everything on an exchange.
So keeping your crypto safe is just as important as choosing the right investments.
Absolutely. And another common mistake is neglecting to stay informed about regulations.
Right. Regulations can change, and being unaware can lead to unanticipated consequences.
Yes, and it could even affect the legality of certain investments. Keeping an eye on regulatory changes in your country can save you from making costly mistakes.
So connecting with reliable sources of information is key?
Yes! Follow reputable news outlets, join communities focused on education rather than hype, and seek out experts who can provide insights.
And what about the importance of community?
Well, being part of a supportive community can help you share knowledge and experiences, but it's crucial to discern between genuine advice and hype.
So it's a balancing act?
Exactly. Engage with others, but always verify the information before acting on it.
I like that. And we can't forget about the importance of emotional resilience.
Definitely. The volatility of crypto can be overwhelming. It's essential to stay calm and stick to your strategy rather than reacting impulsively to market fluctuations.
That's easier said than done sometimes.
True, but practicing mindfulness or even taking breaks from checking your portfolio can help maintain perspective.
And what about keeping track of your investments and performance?
That's vital. Regularly reviewing your portfolio allows you to assess what's working and what's not. It helps you make informed decisions going forward.
So it's a continuous learning process.
Absolutely. And remember, it's okay to seek help when needed. If you're feeling overwhelmed, talking to a financial advisor can provide clarity.
That's a good point. It's about making informed decisions, not just going with the crowd.
Exactly. So those are some of the common pitfalls to watch out for. Recognizing these signs early can help you avoid costly mistakes.
And there are always steps you can take to recover if you find yourself caught in one of these situations.
Right. It's about learning from experiences, adjusting your strategy, and getting back on track.
So what are some immediate steps listeners can take to ensure they're building their crypto portfolio safely?
So when it comes to building a crypto portfolio safely, it's really about starting with a solid foundation.
Right, and I think the first step is understanding what your investment goals are. Are you looking for long-term growth, or is this more about diversifying your assets?
Exactly. And once you have a clear idea of your goals, it's helpful to set a budget. You don't want to dive in without knowing how much you're willing to invest.
I totally agree. A common approach is to start with a small percentage of your overall portfolio, maybe 5% to 10%. That way, it's manageable, and you won't feel overwhelmed if the market gets bumpy.
That's a smart way to think about it. And when you're ready to start, choosing the right platform is essential. There are several user-friendly apps like Coinbase or Binance that can help you get started.
Yeah, I've heard good things about those. They're pretty intuitive, which is great for beginners. But it's also crucial to do your research on the fees and security measures each platform has in place.
Absolutely. Security can't be overlooked. After you've picked a platform, consider starting with a few well-established cryptocurrencies, like Bitcoin or Ethereum. They tend to be less volatile than newer coins.
Right, and it's important to diversify within your crypto investments. So maybe look at a mix of large cap coins and some smaller ones that you believe in.
And don't forget to keep an eye on the overall market trends. Reading news sources or following credible crypto analysts can give you insight into market movements.
Speaking of news, setting up alerts for price changes or significant market developments can be really useful. It keeps you informed without needing to constantly check your phone.
That's a great tip. And you might also want to consider using a portfolio tracking app. It can help you monitor your investments in one place and see how they're performing over time.
Oh, I love that idea. It can really help you see the big picture, And if you're someone who likes to learn more about crypto, there are some fantastic books out there.
For sure. The Bitcoin Standard by Saifedean Ammous is a popular one that gives a solid background on Bitcoin and its economic implications.
And if you want something more hands-on, Mastering Bitcoin by Andreas Antonopoulos is a great resource that dives into the technical side of things.
Those are excellent recommendations. And don't forget about online communities. Joining forums like Reddit or even specific crypto Discord channels can provide support and additional insights.
Yes, community can really make a difference, especially when you're starting out. You can learn from others, experiences, and ask questions without feeling judged.
And speaking of learning, developing a habit of setting aside time each week to review your investments and the market can really pay off.
Totally. And it doesn't have to be a huge time commitment. Even just 30 minutes a week can help you stay informed and make better decisions.
Right. And as you gain more confidence, you can gradually increase your investment. Just remember to stick to your original budget and avoid the temptation to chase quick wins.
That's such an important point. It can be really enticing to jump on the latest hype, but a disciplined approach will pay off in the long run.
Exactly. And as you build your portfolio, keep track of your emotions too. Crypto markets can be volatile, and it's easy to get swept up in fear or excitement.
Yes, practicing mindfulness or even journaling your investment decisions can help you stay grounded.
That's a fantastic idea. And don't forget to revisit your goals periodically. Life circumstances change, and so do your financial needs.
So true. Regularly reassessing your strategy helps keep you aligned with your objectives.
And if you ever feel overwhelmed, remember that it's okay to take a step back. You don't have to be in the market all the time.
Right? Sometimes a little distance can give you clarity.
And when you're ready to dive back in, you can do so with a fresh perspective.
Yeah, I think that's really empowering.
So those are some immediate steps you can take. Now, let's bring everything together.
So as we wrap up our conversation about building a crypto portfolio safely, let's touch on a few key takeaways.
Yeah, first off, it's really important to do your research. Understanding the projects and technology behind cryptocurrencies can make a huge difference in your investment choices.
Absolutely. And then there's that concept of diversification. Just like with traditional investments, spreading your investments across different assets can help manage risk, right?
Exactly. And don't forget about setting clear goals and knowing your risk tolerance. This isn't just about jumping on the next big trend. It's about making informed decisions that align with your financial situation.
That's a great point, Alex. And let's not overlook the importance of keeping security top of mind. Using secure wallets and being cautious of scams can protect your investments.
Right, security should be a priority. So as you dive into this world, remember to take it step by step. There's no need to rush.
Well, I hope you feel more empowered to navigate the crypto landscape safely. Remember, building wealth takes time and patience, whether you're in crypto or traditional investments.
Definitely. And if you found this episode helpful, we'd love for you to like it, subscribe to our channel, and share your thoughts in the comments. If you know someone over 40 who might benefit from this information, pass it along.
And next time, we'll be diving into stock picking strategies that work, a topic that can really help you make the most of your investments.
Looking forward to it.
Thanks for joining us today.
Yeah. Take care, everyone.
Until next time.